Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 17th. So at the annual Quantum Storytelling Conference in Las Cruces, there was presentations made about creativity based on the insights of the World Economic Forum, talking about the 10 most important skills needed in the near future and beyond. And so there was some discussion of creativity, and nobody knew anything about Angus Fletcher or his life-changing research and insights. So I had to brief him on that. So creativity comes in at number 5, creativity, originality, and initiative. So while I was there, I started looking at some of the other things. And my conclusion is, if you want to be ready for the future, and if you're the parent of children and you want to prepare them for the future, be a trader. Be a trader. Why? Because trading teaches you problem solving, self-management, chimpanzee, working with people in your accountability and mastermind group, and the use of technology and development to automate your systems and to gain an advantage there. And that will lead you into innovative companies that you can trade. So be a trader. And the skills, well, yeah, analytical thinking and innovation for sure. And as I kept going down the list, active learning and learning strategies, complex problem solving, critical analysis and critical thinking, sure. How do we know things work and so forth? Leadership and social influence, that is really working with your own parts to craft a holistic and complete and balanced personality, self-management, and then working with others in groups. Technology use, monitoring, control for sure. Technology design and programming, thinking systematically and algorithmically. Anybody want to talk about resilience, stress tolerance, and flexibility, and why those are important to be a trader? And finally, reasoning, problem solving, and ideation. If you want to be prepared for the future, then you should be a trader. If you have children, you should be teaching them to trade. Where could you go to teach them how to trade? What if only there was a way that we could do that? So if you're a subscriber out there and you want to teach your kids to trade, talk to me. We'll put something together for families and children. Why not? That's a pretty good trade of time for skill. And it sharpens the toolkit. Let me tell you, I see that every day in my classroom with my military officers and decision makers. They model the same 10 skills. That's what they have to have. And the matchup between traders and military officers, decision makers, executives is darn near 100%. So that's some food for thought for you right there. But I would also say, yeah, Fletcher's creativity is the unfair advantage. And you guys should take that course. And it starts with taking the Creativity 101 course. You can get that right now for $100 before it goes up to $200 at the start of the year. I'm just saying. All right, let's see what we got today. So yesterday gave us this kind of rejection of the new 10-day high, and today concluded with more weakness. And so all of the joy of the week, which pushed to a new 10-day high, came back all the way down and put us here right on Z-1 at the bottom of the river. And it even tested the PSAR today and rebounded slightly, but that is dangerous territory for Monday. Z2 is not far away. 10-day lows not far away. And in fact, on next week, when we drop this price action from 10 days ago, today's low is the 10-day low. So we are at oversold conditions going into Monday. Now, why is that a good thing? Well, because it sets up a perfect critical state, because now there's an overreaction trade getting ready to happen. And then there's the obvious collapsing trade. I think this is where I'd get the second one. And this is where I would get the third one right there. To the upside, I would say here is the second one at the taking out today's high. And then the third one, I would wait until we get clear of the 10-day and the 30-day high. But that makes today's price action right at a critical state, a thing of beauty. That's everything we want. And then you'll notice the Hull short-term average is way down. The PSAR is up, but it's being tested. And the slope of the 30 is down. All signs point to down and danger. And if this price level collapses right here, all of that support, that's like almost 40 days ago. That's a distant memory. So as soon as that price collapses, this thing collapses in a big way. All it takes is one more down day, one big down day like the previous two, and that thing collapses. So interesting times. All right, let's look at what we did with the sectors today. The S&P was down 1.4. Diamonds were worse at minus 1.6. The Qs were slightly better. Shows you how resilient the big techs have been. It was only down a half, as were emerging markets. The Russell was up 0.92. Talk about that mind split from minus 1.62 in the large caps to plus 0.92, almost 2.6% swing between those two U.S. indexes. That's remarkable. And then Treasuries locked it in today at 1.1% to close above the key price level of 150. Strong defensive play today. All right, let's look at what was worse than the S&P today. Well, blockchain, staples, energy, oil, that's not a good sign. Finance, not a good sign. Then the cluster of the cryptos. With the large cap blended down 3.25, Bitcoin itself 3.5, the Bitcoin Trust 5.2, and then Ethereum down 5.5. And individual underperformers. Devon Energy 2.8, Tex 2.1, US Steel 1.5, Coinbase 1.5. So some of the alternate sectors that had been showing signs of life just fell through. Especially troubling to me is when consumer staples and the Dow are both worse than the S&P. That is showing the undercutting of the foundations of the broad market strength. It's just tech right now. All right. All right, let's see. What was better? Well, there's materials only down 1.25. Oil exploration, blended commodities, Brazil, lumber, agriculture, consumer discretionary, S&P tech, commercial real estate, lithium, and the other lumber up to down only minus 0.5. The FANGs down 0.28, marijuana flat, wheat and precious 0.86, clean energy, Mexico, moonshots and VIX 3%, S&P bios 4.8. Then the ARC had some really strong moves in there. Who'd have bet on that one? Robinhood 5. So Robinhood up 5.3. Alcoa strong day 2.1. Virgin Galactic 1.1. Square, Tesla, Cliff all in the green. Microsoft slightly better than the Qs and down a fraction with John Deere. So that's quite a mix to the upside. It's tech, Mexico, and Brazil. Boy, Monday is just going to be a real test with S&P weakness and then some of these peripheral narrow sectors, clean energy, Mexico. We'll see if the Russell's been a very tactical trade. If the broad market is down, it's hard for me to see that there would be continued interest on the upside in the Russell. That kind of a mind split is really an anomaly. And to see that 2 days in a row would be unusual. Not impossible, but that sets up a real strong narrative. Will the Russell lead the S&P forward, or will the S&P infect the Russell with fear? I think it's more likely to be that. So I'm going to be ready to scalp on Monday for quick hits. Still a trader's market. All right, let's see what we got from the boys today. I was studying the World Championship match recently conducted. Magnus Carlsen is just a monster. Wow, is he good? Nobody like him. All right. All right. So here is, this is Luke with Cliff. So here's the gap. Runs all the way up well beyond Z3. Rolls over and reverses. So he buys it here with a risk box all the way down here. This gets up past Z3. And now there's a 1, 2, 3. He should be out of this trade right here. That is the 1, 2, 3. And that's what he would gain. And that's what he would give back. So he keeps half. But instead, we got a scratch. So that's not good enough. So we left 0.5 on the table today. Reasonable effort on the short side. It comes through the dragon and you're looking for it to come back down and reconnect with yesterday's price, but it doesn't. It immediately kind of reverses. That's a good -1. Then he waits for it gets, I think, a late entry here. I don't think the risk box is too small. I just think the timing, that's where this entry should have been, was here on the PSAR breakout. And then when that fails, you would notice a high, lower highs. You might have been able to scratch that. And then this, where you took the exit, is where the short should be, not here, because the VWAP is broken. And you can see you've left most of the price north. And there's the last time it broke, there was a big move downward. So I'd like to see you get short here. The VWAP is broken. The Bollinger Band mean was broken. The RL90 is broken. Still, this is not bad. That's a breakdown to Z-2. But now this came all the way down to Z3. And we've got a 1, 2, 3. That exit should be here. So you would capture this extra piece instead of this little piece. So instead of 0.2, that should be about a 0.5. Now, when it rolls over, I'd like to see you get short here as a way to front run that dragon. As it was, that was late. It immediately reversed. I think I want you to get out, and it crosses the dragon once again. We left it. And then, naturally this is going to go against you. And then we waited. This is a good re-entry. There's not much you can do about that one. That's just going to be the one they got you on. This is a good move. And now you got to Z3 and you're believing in it. You let it come all the way back to the VWAP and you captured this and you left 2 of those, almost 3 scoops. You let it give back 75%. So if this is 0.4, if you can keep 2 of those 3, that would have been a 1.2 in your favor, which is a 0.8. So we're already 0.5, 0.5, 0.8. We've already been able to turn this thing positive. I like this shot. This one is now, this rolls over. This is a collapsing dragon, or in the pocket, I should say, because you have a high, a lower high. This is a Kata 2, and you're getting it here just as it's crossing the Bollinger Band mean. That's a good shot. Let's not lose money on that. Let's at least break even. Now this entry should be here because now you have a Kata 2 in this direction. And then this would probably scratch, which is fine. And then your short is here when it crosses the dragon, although that's pretty good. Here's a second position we could take. And a third position here if you were going to take 3, but I only want you taking 2. This one is already pretty late, but on the other hand, you're waiting for it to make a new low of the day and off it goes. And it got to Z3, the reversal, scratch that one and then capture this whole move. And then what you'd have is instead of this netting to 0.6, you'd be at about 1.5. Pretty good re-entry. That's not bad. There just wasn't much, and it's worth giving it a chance to break through the VWAP, in which case this should go. So as long as you got paid there, that's fine. Good short, good second, and then bang. Come on, man. Another push to Z3 and keeping a fraction. We want more of that. This is not bad as a re-entry. I think you could get this, but waiting for this is fine. That's a good end. That's a good exit. So I think this could be realistically around +2 instead of -1.5. You're getting a little sloppy there. Here's the S&P. I'm going to say on this one, late in the day on a Friday, low volume, you're trying to play catch up here for some things that were missed inside here. Like this is good. This is a good shot trying to go there. I'd like to see that exit here, though, instead of here. And then that could be a stop and reverse. Although this is still pretty good. I'd like to see you get paid instead of scratch. So try to get no lose plus dinner for 2 at the VWAP. That's the beautiful PSAR flip. I'm not sure why this is an exit, but when you see that it doesn't fail back to the Bollinger Band mean, re-enter here or here, you'll get paid with an exit here. So that's one that got left on the table. This, when it crosses the Bollinger Band mean, that's a good sign. You could pick up this trade and exit here. Now here's where your kata 2s are. So there was something available in here. And then this, I think, was frustration. You were not in the zero state. Time, will, pattern, and money. Time, will, pattern, and money. It's the will that matters, the will to trade correctly. And I think this was just a little frustrating there for Stephen. Here's IWM on the 2s. This is good self-assessment. Yeah, that's your short. Gap down and keeps failing. That should get paid and covered. Oh, okay. You did get that. Sorry. I'd like to see this. I guess like right in here. And that would get paid. That's a good exit. This is a good effort to get short. A reasonable cover, and then some operator error. And then, boy, this will just frost your pumpkin. Even as recently as here, we got, you got 10 minutes to get into the zero state once you realized there were some troubles. So we want to be in a position where in less than 10 minutes, we can get back in the zero state. And then you'd end up getting both of those. On this excursion, here's the range stat move, and invariably it rolls over. So you take that exit right there, as you noted. Now, this is a great shot here because it couldn't make a new high and started rolling over again. That's perfect with a PSAR stop. Great exit. Great re-entry, good scratch. Here's your next kata 2, probably here. And then again, just got a little, starting to chase it a little bit too much at the end of the day. That's just frustration right there. So let's not do that. End of the day on a Friday, leave it alone. Enjoy the break. Well, yeah, I know it's an old one from Luke, but the training is still valid. Though, I mean, the lessons are still there to learn, regardless of when they are. So what Luke is probably going to do is listen to that video that I just gave him and go back to the last one and see if my advice changed. And it didn't. I think I said the same thing back then. TNA. Meanwhile, fellas, find the movers. That's the title of this recital. The best trade was this one, where he stayed with what he wanted and then worked on refining his exit with the sniper. And so now he's not giving back that scoop on 3 positions, just on 2. That makes that a much more accommodating exit. And that's what 15R looks like. Kata 2. That's the one right there. Fractional, scratch, crush. fractional, and then monkeying around a little bit. But that's what 15 looks like. So let's look at this one. This is NVIDIA on the threes. So you have this nice tight box, breaks below everything somewhere in here where it crosses the Bollinger Band mean or the breakdown. There's a trade in here somewhere with that probably exits here. So if you can get short around here, you'll make that move. This is a good shot. I'd just as soon have you get out right here. This is slow to get to reverse. So if you take this exit and then this reverses here, can't even get through the drag and then comes out. This is where you get short, not here. And then that's a great exit. And on this one, as soon as it moves to here, I'd be dropping this thing down to no lose plus dinner for 2 and then take the sniper. There's your SSC. There is your COTA 2. Great exit. This short may be a little bit late. It's a Z3 pinch breakdown, but I think you could either get this one or that one, especially with as much resistance as the PSAR is providing to push everything down. That's getting paid to learn. And that's our trades for the day. Oh, the question was Z3 pinch or should I have waited? No, I think that's good. I mean, I would rather have this here, but that's still really good. And you got paid. All right, still bullish volatile. Weakness lately. The last 2 days have been brutal. The risk Z is still warning us about potential downside weaknesses. We're getting ready to get into the zero state or across the zero line. So, boy, Monday's going to be fireworks. Treasuries, tech, and the S&P are still pretty good holdings right now. ETF2 is down to only 20%. Only 2 of the 10 big indexes are above their 4-month moving average. So ETF2 is really cautioning for reduce your longer term risk. Words to live by. The monthly is in a state of tension in the dojo, equally likely move in either direction. The 9-day, you can see it's starting to stall. For me, 445 is the stop. On the weekly, rising lows for sure, but it has not really been able to break above that key 473 level, and it closed poorly. This shows a real strong possibility of a testing move down to 449, then a test to the Bollinger Band mean. And if that breaks, 430 is in certainly within range. So there's some troubles. The 3-day again shows the big reversal after the nice bounce up. I can't justify being in below 460. I think the move is to be ready for is the upside, but this is telling you be ready for this move down to 440. And we've seen the daily. Things got slaughtered this week. Tech was bad. The large caps were bad. The alternate plays, treasuries and real estate, feel like the reasonable defensive plays available to us right now. And you can see how the things are great until they're not. And all of the three biggies got smashed this week. Again, healthcare and consumer staples were the better stores of value as defensive plays inside the S&P. But again, it could be a lot worse. You could be chasing your tail here. Weakness in the broad ETFs. Healthcare and staples look pretty good as defensive plays. Treasuries resuming their joy. All the winners got smashed. Coke and Merck in the staples. Yeah, again, notice this is why it feels like this could be a significant turning point. All of the asymptotic winners getting smashed. Only the S&P and the Qs are on the buy signals. Everything else is getting murdered. I can't tell you how good of an indicator that is. Boy, is that helpful. S&P itself and tech. Yeah, winners continue with home builders, tech, and energy. Good trading vehicles, the Russell, energy and semis, biotechs, liquid and volatile, Brazil and oil exploration, and the software index. Shifting to the daily, the Russell on a channeling, or the Russell mid caps on channeling. Only a few dojis today in the Dow. A few more hit their triggers on the auto framer. I like a Nike right there as a possible rebound play. Mexico, small caps had a good day. Treasuries had a good day and are still showing 4.4 to 1. That's not bad. Auto framer standards. Brazil, Asia less Japan, and treasuries look attractive to me. And treasuries are still on a daily squeeze. They're poised for a breakout. Even, they're above 150, but there's still room for them to go. That's not bad. This is telling. Nothing is even in the green on the in the Dow, and then on the ETFs, it's only treasuries and Mexico in the green. So this is broad weakness across the board. That's what that's showing. Respect the symbols or the signals. Failure to advance is now beginning to fail, and can 450 be far behind? All right, that's everything we got for today. We posted the fifth and final session for the protreptic course. We were taking a look at how to apply that style of coaching in groups, in organizations and teams. I think a great way to think about how to build high performing teams and collaborate. It was a very good session. And and more to follow on that one. All right. That's everything we got today. Tomorrow morning, 8:30. I see Ernie was in here earlier for the coaching group at 8:30 in the morning. I'll send you a link on that, Ernie. And then otherwise, there were no questions posted in the foundation. So we'll just convene that at 8:30 tomorrow for trade frames like we normally do for swings. And then Sunday, 8:30 for the daily trade frames. Okay. All right, guys, take good care, and we shall see you tomorrow and then be ready for Monday.